Welcome back to Opening Bell. Now, let's now discuss some of the choppiness we've seen in the overall markets. Joining me now is Ken Mahoney, CEO of Mahoney Asset Management. Ken, thanks so much for joining us on this Friday. Now, you described these markets as tired. Walk us through that thinking, because I do think that's so accurate right now, especially without really seeing any major catalysts propelling any upside here for the markets this week.
I think we're tired too. These 24/7 news cycles. Keep up with them. We're behind it no matter how much you try to get in front of it. Yeah. So thank you for having me on today. Look, it does feel tired. And that's the concern, is the catalyst. We went through earnings season and that was kind of a thud. I mean, I have to tell you, I've been doing this a long time, and rarely do you get the setup where companies raise guidance and get punished for it. I mean, Amazon probably poster child for that, down 40 points. Meta was up like 60 points, gave it all back 3 days later. Microsoft down 60, you kind of get it. The reaction was just awful. And then you started looking out front. Now, we got some numbers today on the inflation front. Fed's not going to like that. There's no cutting rates probably on March 18th. I think we knew that anyway. So there's not a catalyst there. And I hope to think the best shot we have is NVIDIA's earnings next week. I mean, they're at the epicenter of AI. Maybe they can kind of fill us in a little bit what's happening, because that's a microphone drop, for Amazon to say they're going to spend $200 billion and not tell shareholders what the return on investment is. So I think we're still reeling from earnings. You have all this geopolitical thing, you shake it all up and you get yourself that movie, The Perfect Storm, hit by 3 or 4 different sizes.
So as far as, some of this rotation that we've seen out of big tech, out of our Mag 7 that everyone has just written off as no longer magnificent, I do think that it's still definitely the biggest component, frankly, to the overall market is the Mag 7, but specifically NVIDIA and their earnings next week, as you mentioned. And so what will have to go right to actually see a positive move that holds? Because I do feel like the biggest risk to NVIDIA earnings as of late has been a more neutral or a more just tired, frankly, reaction. And that's, I think, where we're seeing this overall sentiment for these AI trades right now.
Right, and you hit it right on the head, Jenny. It's not about beating and guiding higher. I think all those companies did that. All Mag 7 did that, I think, maybe except for Tesla. It's the reaction to it. So even if NVIDIA blows out the numbers, investors are still going to be kind of like, okay, what's going to happen next day? We had that Palantir growth, shot up in after hours and shot up the next day, and then 2 days later gave it all back. And I think that's going to be a big concern with NVIDIA, because the playbook has been, for the last couple of weeks, watching earnings after earnings and good news get sold off. So I think investors are going to be bracing themselves. What they need, though, they need to really blow it out as far as the top line. They really need to blow it out as far as the net. And they need to kind of come around and let us feel reassured that the AI trade is still in the early innings, as the CEO continues to tell us that.
Okay, and broadly speaking, software does look like it's being repriced hard on a lot of these AI disruption fears. So how do you go about separating the complex ecosystem winners, like, say, a Microsoft or a Salesforce from the more single product names?
Yeah, so we don't like Salesforce, we don't like Adobe, but we like Microsoft a lot. So basically, you get all the different verticals with them, right? You get the cloud, you get gaming, you get AI through a Copilot. And again, we know this story. It's the sum of the parts greater than the whole. That doesn't really help right now. But I do think this is throw the baby out of the bathwater. And that last I looked, it is a software company with 1.1 billion devices. So margins may get eaten up a little bit with the ChatGPTs and the Groks and the latest grades that are coming out. But again, this stock has really paid its price. It's been punished. It's still reeling. Again, we don't really have a stable ground here with tariffs going on and the disappointing GDP number this morning and that type of stuff. But again, if you want to kind of look at semiconductors led quite a bit, we're seeing that we think software and got really thrown out. And I would stick really with the Microsofts.
Okay, and so switching away from tech here a bit, we know staples have led all year long. Big volatility has also remained in metals, and the Nasdaq is not outperforming the S&P 500, which is just frankly odd. So do you read this more as a risk-off signal or a liquidity story that could, of course, unwind rather quickly?
Be nice to see that, again, value then start going back towards growth, because that's where your leadership will be. That's when the market's more exciting, and that's when the Nasdaq will lead. But it's going to take some time. So I don't see money really leaving the market. I just see it rotating around to safer havens.
And hey, you must be a good luck charm for these markets because since you've been on, we've seen actually a decent recovery in at least the S&P 500. It's a pretty unchanged, but at least some more green across the screen right now.
That's a win now.
I know. That does feel like a win to end this week of gosh, tired is a great way to frame it, but so appreciate your time this morning helping us kick off the trading day. Ken Mahoney, CEO of Mahoney Asset Management. Thanks so much.